So a lot of people always ask me, when do I buy and when do I sell in the market? Now, this is something that plagued me early on in my development when I was really trying to find consistency. It was like, man, if I just knew when to buy and when to sell, or where to sell and when to buy, I would be light years ahead, right? And so I think this is something that is on a lot of new traders' minds. It's like, man, if I could just pinpoint areas where I should be entering in, I can, know where the direction of the market is going overall. So in today's video, I really want to show you a good way for you to, for starters, understand time and price theory, but then also time your executions to where you're on the right side of the market. All right. And so right now we're looking at a daily chart, right? And I'll throw lipstick on it. I'm gonna try to keep it, pretty simple to understand, very elementary stuff. What I typically go for, I look for where the next potential draw on liquidity can be, and what I do is I wait patiently for that liquidity to be purged. And then from there, I look to take the market in the opposite direction. So, for instance, if I'm looking to go long in the market, I typically look for sell side liquidity to be purged first. Then I go and look to see where the next draw on liquidity, or where that next resting buy side liquidity is, to where price could most likely target next. Okay. And so, as you know, the market moves up and down, up and down. And so this is, in a way, like what you're taught retail strategy wise, like support and resistance, right? And so I feel as though the way support and resistance is taught traditionally is a little flawed in the sense that it does not factor in liquidity pools and things of that nature. And so when I look at this, I'm looking at price has moved and it has purged this old daily low. And so when I come in on the 15-minute chart, for instance, or let's just say the hourly. So what I see here is we had buy side liquidity that was swept. Price went and it broke this market structure, and it showed that it wanted to continue towards the downside and go and attack these equal lows, or that sell side liquidity. Price went, grabbed that sell side liquidity, okay? And as you saw on the daily chart, we had that as price purged this, it continued to show momentum to the downside. So in real time, obviously this is in hindsight, but if you tap into the live streams, you see I talk about this in real time all the time. But when that sell side liquidity got purged on that hourly, and we saw that we had heavy momentum on this day and the next day following, that I would automatically think, okay, we're going to go and try to attack this old daily low. And when we do, I know that I can put myself in position to look to go on the opposite side of the direction. Because now what it is telling me, as I create this narrative of, when I'm looking at price and when I'm looking at how price is delivered, I'm saying that the market makers have been priced at a premium, and what they're doing is repricing to a discount. In basic economics, you want to buy at a discount, you want to sell at a premium. Very simple, basic econ 101, right? And so when I see that price is drastically repricing, I'm looking for the opportunity to get in at a discount as they want to reprice back to a premium. Okay. Now for this little small leg here, this is the daily chart, obviously, so it looks a lot different, and you can see market structure, a lot more clearer on the smaller time frames. But just to kind of create that narrative, I'm seeing the market makers take out those pending sell stops, right, and that sell side liquidity, I want to say. And when I know that when I see this immediate rejection here from this old daily low, like I already have confirmation. I see the swing low formed here. Once I see this low and this higher low to the left of it, the next day I'm already anticipating us to go and attack the previous highs and go back up to that buy side liquidity. And when I go back on the hourly chart, so as I'm seeing that come down, right, I'm seeing this. I'm seeing that get purged, right? And so I'm not getting in like right when it purges. But what I am going to do is I'm going to wait for a pullback or a retracement into either, whether it's using my fib tools or looking for order block, mitigation block, breaker block of some sorts, or a fair value gap typically. And so as I can see, as prices purge, I see that we create this last down candle before the up move. So I'm looking at this as an order block, but then I also see this gap created, right? So I see this this void in price. So I see this buy side imbalance, sell side inefficiency. So I know that this would want to get balanced out at some sorts, but I'm looking at the order block as a potential or as my entry point. Okay. Now, in this instance, this is how I know it's time to buy, okay? Because we didn't purge the sell side liquidity on it. We took out an old daily low. Now I know that we're at a deep discount, and now I know that the market makers will, for the foreseeable future, they will want to draw up on the next logical area. And so as I see that, my eyes immediately go here as the next draw on liquidity for buy side liquidity, and boom, price attacks it. Right, you get a reaction, you get another pullback. So right here, I see you have one entry here. Then you got, if you missed that entry, you get a second entry here. You could have got it at the 79 level, the 62, 70 or the 79 level there, right? So that's a second entry here. Like once it comes and pulls back, my eyes now that we purged that buy side liquidity, my eyes go here for the next area of liquidity to be purged or taken out. And so that's exactly what happens. You get that second position, then it takes out that buy side liquidity, right? And now that is potentially how I look at when it's time for me to go in and enter a trade. Now, conversely, it will be the same as if when we take buy side liquidity. So or when we purge an old high, when I'm looking to go short, okay? And so when you're at the charts, the key thing you want to just always pay attention to is where is the next draw liquidity, right? You want to know what's the institutional order flow on the higher time frames. You want to get in alignment with that. And then once you get onto these entry time frames like the hourly, 15-minute, 5-minute chart, you want to see an entry by way of, using your fib tool, whether you are looking for a rebalancing of a buy side or sell side imbalance, and also look for an entry at obviously an order block or a breaker block of some sort. So that's just typically how I look at, very, very just kind of elementary like way of looking at like, okay, I need to see one or two things happen first. I need to see sell side or buy side liquidity purge first to go the opposite direction, right? So when I'm looking at price, every time I'm looking at price, people call this a sell-off, but it's really just a repricing, right? It's just a repricing. And I mean, for your understanding, you call it a sell-off if you want to, but when I'm seeing that, I'm looking for I'm looking for old daily lows to be taken out, right? And that's happened. And then I'm patiently waiting. I'm not just getting in as soon as we purge it, because I mean, depending on market conditions, it could continue or what have you. But once I get a good read on it, I'm looking for an imbalance, an order block, which I find here, and then I'm looking to take it up that way. Okay. Now, this could have been the same situation where we took out this buy side liquidity, right? And this is a lot more advanced, I want to say. Taking an entry the opposite direction when it just sweeps the buy side liquidity. But you could have technically you could have seen this as buy side liquidity. You see it sweep. You could have waited for price to return here, and as you can see, you see an order block right here, and boom, you could have took that entry just like that. So just some ways for you to just start looking at your charts, man. Like start recognizing the order block, start recognizing the fair value gap, start recognizing above all else where's the next logical draw on liquidity, and you'll start to see how prices maneuvers up and down, up and down, up and down. And you want to always, buy in low, sell up high. And you don't have to get at the highest point. You don't have to chase the highs. You don't have to necessarily chase the lows. You can wait for confirmation. And I mean, because technically speaking, this is not, I didn't catch the low. I wouldn't have caught the low here. But if I waited for that confirmation, I waited for an order block. I got an order block with that imbalance and it came up. Same thing here. It swept that. Price dropped lower. Came back, it pulled back up into this order block and this gap and continued to the downside, right? And so these are ways you can scalp the market. You can swing the market this way. There's many different, I want to say, models or plans that you can tailor towards this. But just hopefully that kind of cleared up some, cloudiness in your head on when you should be looking to buy or sell. The key thing is to be patient, stay disciplined, wait for that, purging or that sweep of liquidity, and then, you can wait for confirmation, or you can be aggressive if you want to. But all in all, that's wraps up for this video. See you guys